It is very difficult to predict conclusively whether investing in gold or Bitcoin will yield a higher return in the decade from 2025 to 2035, as both assets have different characteristics and risk factors. However, based on the characteristics of each asset and current market conditions, I'll give you a comparison of the expected returns of the two assets, and explain 5 reasons why Bitcoin is likely to record a higher return, or why gold might be a safer option. Why Bitcoin investments are likely to record higher yields, high volatility, and growth potential. Bitcoin is very volatile compared to gold. This could be a big risk factor in the short term, but it means the potential for explosive growth in the long term. As the adoption rate as a digital currency increases and is incorporated into institutional finance, its value can rise significantly. The imbalance between supply and demand. Bitcoin has a very limited supply as its total issuance is limited to 21 million. On the other hand, demand is expected to increase steadily as interest and investment in cryptocurrencies continue to increase worldwide. This imbalance between supply and demand could be a powerful factor driving Bitcoin prices in the long run. Generational change and digital asset transformation. Millennials and Generation Z have less resistance to digital assets than older generations, and they are more familiar with them. As they emerge as economic players, investment in digital assets such as Bitcoin may become more active than traditional safe assets such as gold. Technology advances and innovations. Beyond just a means of storing value, Bitcoin can be used as a key asset for various financial services, DeFi, based on blockchain technology. These technological advances can increase Bitcoin's usefulness and ultimately increase its value. New hedge against uncertainty in the global economy. Gold has traditionally been seen as a hedge against inflation and economic crises. But Bitcoin is out of control of certain countries or governments, so it is recognized as a new form of digital gold against currency depreciation or geopolitical risks. Why you can expect safer and more stable returns when investing in gold. Traditional safe assets. Gold has proven its value as a hedge against inflation and economic uncertainty for thousands of years. If you aim to preserve stable value from a long-term investment perspective, gold is still the most reliable asset. Low volatility. Gold is significantly less volatile than Bitcoin. This is hard to expect large returns in a short period of time, but it can prevent a sharp loss of investment principal, which is advantageous for investors seeking long-term stability. Value of real assets. Gold is a finite resource with real life and has intrinsic value in itself. On the other hand, there is also a perception that Bitcoin is nothing more than a digital code. The value of gold as a real asset can shine even more when the financial system collapses or technical problems arise. Demand in different industries. Gold has real demand in different industries, such as jewelry and electronics. In addition to investment demand, industrial demand acts as a supporting factor for prices, increasing price stability. Government and institutional holdings. Central banks and governments around the world are using gold as their main foreign exchange reserves to stabilize the value of their currencies. This is a powerful factor supporting gold's value. In conclusion, it is Bitcoin that is likely to record higher returns in the period from 2025 to 2035. However, this carries high risks. Gold, on the other hand, would be a better choice for investors seeking stable value preservation and predictable returns. Investment decisions should be made carefully based on your investment propensity, risk-taking ability, and understanding of the market.